our team, or do you have Molly and Sean's full name as well?
Well, folks, thank you so much for taking time out of your busy schedules to give us about an hour here today to discuss a very up and coming and exciting relationship between TLC Companies and Thunder Funding. My name is Eric Lynn. I'm Chief Commercial Officer for TLC Companies. And I'm here with the Thunder Funding team. When I say team, it's like a full basketball team, I think, is what I'm looking at here, which is pretty cool. And here in a minute, they're going to take us through a presentation on what Thunder is, the solution it brings to the market. We are going to have time for Q&A as well towards the end. We have a couple different ways to do that. This being a Teams meeting, you can raise your hand at the top there. There's a reactions tab. If you want to speak, just unmute yourself, and you can do it that way. Or we have a chat box as well. So I've already put a little note in there for all attendees. Feel free to post your questions right there. If we don't get to them right away, we'll get to them towards the end when we have time for a Q&A. So again, thank you for attending today. We appreciate that. And it's my pleasure to introduce Willie Andrus, Executive Vice President for Thunder. And I'll let him take over and make the other introductions.
Sure. Hey, thanks so much. Like Eric said, time is valuable, and we appreciate everyone taking the time to join us here today to talk about freight factoring. My name is Willie Andrus. I'm the Executive Vice President of Thunder Funding. With me today, Evan, you want to go ahead and introduce yourself?
Yeah, absolutely. How you guys doing? My name is Evan. I'm the National Sales Manager over here at Thunder Funding and help guide the sales team.
Molly?
I am Molly Connerly. I am the sales supervisor over at Thunder Funding and assist Evan with helping the sales team.
All right. And then Sean.
Yeah, I'm Sean Fells, Marketing Director here at Thunder.
So that's our team. Thanks so much. We have lots of years of experience in freight factoring combined here. Our company is about 8 years old, but the founders of the company, we came over from another larger freight factoring company. And so many years in the business in the transportation industry and specifically in freight factoring. Eric, great. Go ahead.
Yeah, so that's the Thunder team. You've probably, if you're in this meeting, you've had a couple of nudges from TLC Companies about this relationship, emails, a couple of different correspondences. This is the first time, however, we've been able to properly introduce on a screen what the Thunder solution is and how it could be applicable to your business. We've also got a couple of agent partners in this meeting I see, which we're excited for as well. But with that, I look forward to seeing the presentation. And again, put your questions in the chat box or just raise your hand up there and we'll get them answered. Take it away, guys.
All right. Thanks so much. Kendra, you can go ahead and change to the next one and Evan, take it from here.
Cool. Sweet. So some of the topics today we'll be covering. Number one, what is freight factoring or what is factoring? How does factoring work? Why use factoring? Why Thunder Funding? And what to look out for with other factoring companies.
Great, thanks. Next slide, Kendra, please.
Cool. So what is factoring? So cash flow keeps a trucking company in business. Freight factoring is about having ready funds for fuel, payroll, repairs, and whatever else life throws at you that day. Factoring is an easy way to manage cash flow for your trucking company. We buy invoices for freight that you've already delivered, so it's money that is advanced on accounts receivables.
All right, great. So before we go to the next slide there, go back one, Kendra. So as we all know, cash is king in business, especially small businesses. Cash is king, and so and especially in trucking, with the cost of fuel, insurance, plates, registration, the tractor itself, sky high trailer prices. Cash is king, and the very basics of what Thunder does is we speed up your cash flow. We speed up your accounts receivable. We assist it in going from 30 days to 1 day or same day, however you like to receive your funds.
Well, I got a quick question for you while we're on that topic of cash flow, just real-time world events, right? So we got 8.3% inflation right now. We got the Fed raising rates. I am kind of curious, is there any correlation to what your business, your solution you bring to market? How are you experiencing that? How are your clients experiencing these macroeconomic factors today?
Sure. Well, like anyone, we had, if you have the timeline of post-COVID and in March of 2020, you saw a quick dip, and then in the spot market, we saw rates just continue to climb, and with those rates continuing to climb, for the carriers that are in that spot market, there were some good years here, and then the cost of fuel followed, and now inflation, and so we're seeing the need for cash flow ever more present these days, and the carriers that have found themselves on those dedicated lanes that are less susceptible to the spot highs and lows will benefit from that. And so, but today more than ever, cash flow is king, and it'll be interesting to see what happens to the spot market in late 2022. We should see we're already seeing some adjustments there, and so you got to tie our shoelaces tight and run tidy businesses.
All right. Thanks for the context, Willie.
Mm-hmm. All right, next slide, please.
So how does freight factoring work? A freight factoring company, also referred to as a factor, purchases freight bills, accounts receivable, at a discount, providing upfront funds to a client for unpaid invoices. Instead of having to wait 30, 60, or 90 days for your customers to pay you, a factoring company can send money in 1 day. Invoice, rate sheet, and bill of lading are sent directly to a factoring company instead of a broker or a shipper. So a lot of customers, whether it's a broker or a shipper, they typically pay a trucking company on a delivered load 30, 60, or 90 days after you've hauled that load. And as Willie was touching, cash is king. And so to have to wait 30, 60, 90 days and do your own billing and collections can be difficult to do. And so to have a factoring company like Thunder Funding to pay you next day on your loads or same day on your loads is super, super important for these businesses, because there's so much money going out. You have to have cash flow readily available to keep up with whatever it is life is thrown at you that day.
Evan, what happens if a broker doesn't pay you?
Great question. Who wants to take this one? Evan, you want me to?
Sure.
So, it's different for every freight factoring company. That question, what if a broker doesn't pay you, or what if a shipper doesn't pay you? Specifically, so some factoring companies are non-recourse and some are recourse. And the difference between those two are recourse means that no matter what happens, that if a broker or shipper doesn't pay you, if they go bankrupt, it's going to come back to you. The recourse is back on the carrier. Specifically with Thunder Funding, we're a non-recourse factoring company. So what that means is, if you deliver a load and we've approved that load and we purchased that load, which means if we did purchase it, we did approve it, and we'll talk about some credit checking tools in the next slides. But if you deliver that load cleanly, without any issues, and in the time that we're collecting that load, the broker or shipper goes bankrupt or insolvent, then you're not responsible for that load. That falls on Thunder, and we'll cover you for that. Great question.
I feel like that's a differentiator, I would think, from others in your space, right? To be able to say this is non-recourse. Talk about offering some peace of mind to a lot of carriers that might be on this in this meeting right now.
Yeah, absolutely. It's a differentiator. And it's one in a couple of slides, we'll talk about the differences between Thunder and other factoring companies. And, you know, there's been a lot of misuse of the word recourse, non-recourse, but, you know, we're really educated on the credit side of things. We're going to protect your business. We're not going to make bad decisions with you. And so, you know, we offer a credit checking tool, a 24/7 login that you can log in and check the credit. If you want to take a deeper look at credit, we'll take a look at it with you. And so that is a huge differentiator.
Great, thank you.
Mm-hmm. Next slide, please.
Why use factoring? So factoring gives you access to fast money, fuel advances, free credit checks, back-end office support, bankruptcy protection, access to partner services, and access to education. So, you know, it's more, Thunder Funding does more than just get you paid next day on your loads. We want to help you with a variety of things. And some of those things we offer are fuel advances 7 days a week, where if you pick up a load and send us your rate confirmation and your pickup bill of lading, we can advance you 50% of that invoice within 15 minutes of picking up that load. And that's a 7-day-a-week program. Next, free credit checks. Credit checks are super, super important because there are so many brokers and shippers out there. And so you want to have a source that you can rely on and run credit on those shippers and on those brokers to know that you're hauling for good customers that are going to pay their bills and they're going to pay on time. Back-end office support. Again, what Willie touched on, the billing and collections that we're going to take care of for that company. That's super, super important because a trucking business, their time is worth money. And so a lot of these small to mid-sized fleets, the more time they're spending on billing and collections, the less time they're focused on finding that next best load out there. And so ultimately that's going to have an effect in business. So we're going to take care of all the billing and collections and back-end office support for the company. Bankruptcy protection. We only offer a non-recourse factoring program, and that's super, super important. And like Eric alluded to, it gives that company kind of that peace of mind, knowing that if a broker goes bankrupt or files for bankruptcy or goes insolvent, we're going to protect you on any loads that you haul during that collection process. Access to partner services. We're super well connected in the industry. We have great partners just like TLC and others out there that can help in all sorts of areas of the business, as well as access to education. I mean, here at Thunder Funding, we've created a lot of great tools to help educate trucking businesses because there's so much that goes into it. And so to be able to, the more knowledgeable that you can be in the industry, ultimately, the more successful you and your business is going to be. So it's super, super important.
Right. You know, access to webinars like this. Thanks for putting this together, Eric. But, you know, this is kind of where in freight specifically, unlike other industries like the garment industry or construction or staffing, where factoring is prevalent as well, in freight, we've kind of evolved into a service business. It's no longer, you know, factoring used to be the F word, where maybe you're in trouble, your finances are in trouble. It doesn't mean that anymore. You're not selling off your AR. You're simply using a service. So much like TLC has become for your back end with HR and payroll and compliance and driver recruitment, we're doing everything for you. You deliver loads cleanly. You credit check for those loads, deliver them cleanly, send us the bills. We're going to send you the money and collect from you. And the good factoring companies out there, they do a really good job on that back end, the billing, the collection, the credit checking. And our team up in Nampa, Idaho, we have 2 offices, one in Carlsbad, California, one in Nampa, Idaho. In Nampa, Idaho, it's a team of collectors 20 deep, and they do a really, really good job. It's a nice balance between comfortable reminders of paying the freight bills all the way to escalated collections if we ever need to get there, which we rarely do. Only 1% of of the millions of dollars that we have out in our AR, only 1% is over 60 days. And so that's kind of proof in the pudding of how well we do with collections. All right, next slide.
So why Thunder Funding? There's a lot of factoring companies out there. So why Thunder Funding? Well, some of the things we pride ourselves in is our legendary customer service. And that ties into the next point, a couple down, 90-day agreement. We have a short-term 90-day agreement. It's one of the shortest agreements in the industry. And so for us to have a short-term 90-day agreement, we better have really good customer service, or else we'd have people leaving at the end of that 90 days. So right there with the short-term agreement, we're going to have good customer service, because it wouldn't be sustainable to have people leaving at the end of 90 days. So we really pride ourselves in picking up our phones and taking care of our customers. We're ranked #1 on Truckers Report. Truckers Report is an online forum for truckers that they go to. It's a really well respected site. So if you haven't been on there, I would suggest doing so. Simple upfront pricing. We have a 1.5-page agreement. Our pricing is simple. It is upfront. We're very transparent in the way we do business. So, there's no hidden fees or anything like that. Our pricing is very upfront. It's very reasonable. And we only collect when invoices are sent to us. No minimum volumes. There's no volume requirements with us. And this is super important, because in the industry, you're going to have things thrown at you that whatever it is that you're doing. So, you could have a truck breakdown, you could have a tragedy, whatever it is. So to have no monthly minimum volumes is super, super important, because sometimes we see competition where they have minimum volumes and your rates can go up. But with Thunder Funding, it's one flat rate, and it's going to stay that rate all the time. Right. Industry leading fuel discounts as well. Very, very important, especially right now with what these fuel prices are doing. You've got to be saving some money at the pump. About 40% of the trucking business's costs are to fuel. And so to have some fuel discounts is super, super important.
Yeah, probably even higher right now. I haven't looked at the recent numbers, but I would guess that maybe 40 to 50% of operating expenses are fuel right now. And our audience probably knows that better than I do. But what Evan's talking about is what I alluded to earlier. When we built Thunder Funding, we set out to do it differently. We wanted to be service oriented, and we wanted to build a company where there was no minimum volumes. As carriers mature, as trucking companies mature, they find ways to get out of spot markets and into dedicated lanes. And maybe you have a relationship with somebody in the town that you're based at that the business is domiciled out of, and you have a contract with that farm or whatever it is, and that farm pays you in 7 days. We're not going to expect that you come to us and factor those loads. And in the past with other factoring companies, once you leveraged all your receivables with the factoring company, you had to send them everything. And so we set out to do that differently. So you could continue your dedicated contract lanes that pay you in 7 days. But when you go out into the spot market and deal with brokers that want to pay you 30, 45 days, that's what you can send to us. And so it's use it as you need it, or use it all. And that's really where we set out to be different.
So I want to dig into something here too. I sent an email to Willie a few weeks ago with a simple question of, hey, do you do anything outside of trucking? And his answer was one word: no. And I think there's some power to that. If you think about TLC, also very transportation specific. However, we also have a family of brands that can write other business outside of trucking. So why don't you talk a little bit about your focus of just the transportation sector and what that means in terms of differentiating yourself in the marketplace?
Yeah, sure. It's tempting as an EVP, a sales oriented EVP. It's real tempting to just take our model and put it into staffing or into construction or into garment, all the other industries, that are out there and available for us for factoring. But trucking is what we know, and trucking is what we're good at. One of the fellow founders, John Downing, was a truck broker for 30 years. And before that, he was in trucking, and his grandpa was in trucking. And so we come from a family of truckers, and it's what we know. And there's a lot to know in trucking. There's a lot to know about the credit of brokers and shippers and protecting yourself and the risk management of trucking. And so our deep knowledge of trucking and our multiple years in freight factoring has made us really, really good at what we do. And we just don't see a reason to deviate from what we really know. This is what we know. And I wouldn't be able to say that if I was talking to a staffing company audience here. But we can say with confidence that we have one of the deepest benches and starting team when it comes to knowledge about trucking.
Makes sense. Thank you.
You're welcome. All right. Next slide.
What to look out for with other factoring companies. So a lot of the competition out there, like I was touching on a little bit earlier, longer term contracts. We'll see 6 month to year-long contracts. And so, you never really truly know how that relationship's going to go. And so we pride ourselves in our short-term agreement. Come try us out, kick the tires for 90 days. We're never going to hold you back where you don't want to be, where some of those longer term contracts, sometimes you're stuck in those contracts and can't get out. So avoid those longer term contracts. Volume commitments. We'll see competition have volume commitments in their contracts. And so these are things to look out for. As we've built our program, like Willie was saying, you use us when you need us. And so a volume commitment kind of goes against that, because if there's a certain amount that you have to uphold to, you never know what could be going on in the industry that day, whether it's a truck breaking down or you got to be off the road for a couple of weeks or whatever the status of things are. So avoid volume commitments. Also, hidden fees. A lot of our competition, they have longer term, or their contracts are 15, 20 pages with legal jargon in them, and they're very difficult to read through. So what companies will do is they'll just go straight to where do I sign, and they sign that agreement, not really knowing what they're getting into. And so once they begin factoring, they realize, man, I'm getting hit with a processing fee, and I didn't realize I have to pay this to get things started and stuff like that. So watch out for hidden fees in longer term contracts. No buyout clauses. Also, in those contracts that are signed, sometimes competition will put no buyout clauses in there. And a buyout essentially is where you're with one factoring company, you want to make a change to another, and that new factoring company you want to go to buys out the invoices that are on the books at your current factor. And so some of our competition will have no buyout clauses, which basically says you are stuck with us until the end of your agreement. And even then it is challenging to get out because you have to continue factoring, and sometimes they'll put you on pause until you find a new factoring company, and then you can't submit any more invoices. So just be wary of those no buyout clauses. Applications, a UCC will be filed. Some of our competition, what they'll do is they'll send you an application, and in that application somewhere it will say that a UCC will or can be filed. And a UCC is also can be called a lien. And so what these liens will do is they basically lock you in with that factoring company that you signed that application for. So you may not realize that you're signing an application, and that application may lead to their contract and all their pricing. But in that application, they can go and file a UCC or a lien on your business. And it's extremely difficult to get out of those UCCs or liens if you're with the wrong company. Tiered rates, we'll see tiered rates that you also want to look out for. And it also kind of ties in with volume commitments. Tiered rates are something to be, weary about as well. With Thunder Funding, it's one flat price all the time. And so, to be on a tiered rate, depending on when a broker may pay, or depending on what your volume is, can be problematic for some businesses. So to know you're at one flat rate with Thunder Funding all the time gives you kind of that peace of mind that that you're always going to be tied into that rate. And then lastly, chargebacks. Chargebacks are definitely a challenge in the industry. But what you'll see, some of the competition, they have chargeback policies in their agreements where at 60 or 90 days, they can charge back an invoice in full to that carrier. And for a lot of small to mid-size and even bigger size trucking businesses, that's super detrimental to business to be charged back on loads. So like Willie was touching on earlier, 1% of our invoices, the millions and millions of dollars we have out there, is at 60 days. And so it just ties into the great job we do at billing and collecting. So we don't have to charge back carriers. And so our competition, they may make, one call or send an email about an invoice. And then it ultimately leads to a chargeback in 60 or 90 days, whereas we're going to make multiple calls and multiple follow-up attempts to track down that money. So nothing, or not nothing, but we don't lead to having to charge any invoices back.
Right. This is a huge point, the chargebacks things. So for some factoring companies, it's just a matter of process for them. They make one call at 30 days. They might make another call at 45 days or send an email. And then at 60 days, as a matter of process, they simply charge back the invoice to your negative reserves, and it comes out of your next funding, your next set of invoices that come in that you send in on a Thursday right before payroll. All of a sudden you're hit with that chargeback because it hit 60 days, and there's no warning of it. There's no conversations about it. And so the partnership that we've created is different. We'll help you file a bond on that broker. We're going to have communication with you all the way through. If you deliver that load cleanly, with no deductions or anything like that, we're going to help you get that full value of that invoice, or we're going to help you down the path of filing a bond. And in the very extreme circumstance, when that company goes insolvent or bankrupt, we got you covered. And that's a huge difference for you, that partnership. All right.
That brings up the question too, if someone's on the call right now and they're with a factoring company and they want to switch to Thunder, what does that process look like? Where is that coming up? Am I stealing your thunder?
Yeah. I don't know. Are we at the end of our slides? We got one more, right? We'll go ahead and let Molly answer that one. You want to answer that, Molly?
Yeah, absolutely. The process it's different for every factoring company, and whichever factoring company that current carrier is with, that conversation looks a little bit different. We want to see their business. We want to see what type of agreement that they're in. But first and foremost, we want to make sure that the carrier is not going to get burned in any way. Like Evan kind of touched on, these bigger factoring companies that require long-term contracts, in their clauses at page 11 that you skipped over says if you want to leave your contract without properly terminating or waiting until your account is at zero, you're going to get charged X amount of money. We see it time and time again where factoring or carriers are charged upwards of $10,000 to leave their contract. And so that's why it's so important to communicate this to everyone, to the carriers that you're talking to before you sign anything. Please make sure you read the fine print, because we see carriers get stuck in these types of situations all the time where they simply can't afford to pay the termination fee that they weren't even aware was going to be put on them. So to have that open communication with the carriers, walk them through it, communicate for them, reach out to the other factoring companies, see what we could do. I mean, Thunder Funding personally has facilitated hundreds of buyouts and have helped carriers get out of a termination fee and even pay some of it. Um, so the conversation's different depending on which factoring company that they're currently with, but properly terminating, making sure that the verbiage is correct when they're terminating their contract, and making sure that they're doing it properly so that that termination sticker, fee, whatever it may be, isn't tagged to their accounts receivables.
Right. Yeah. Great answer, Molly. And so it's really a consultation process with each carrier that comes along. We have deep knowledge of all of our competitors. We know what their contracts look like. We can help you go through the contract and find out what we need to know and how we need to properly get you out of any contract there is. We're also going to review the open AR that the carrier has with that other factoring company. Because essentially what happens is if you've sold 100 invoices to a factoring company, they own that accounts receivable. And so in order to transfer your account from one factoring to the company to our company, we in essence have to buy that inventory of invoices. But we handle that entire process. We consult you through it. Sometimes the penalties of these other factoring companies, which we don't have any of these in our contract, but sometimes they're so severe that we just have to wait out a contract, because there is an end to every contract. Most contracts are a year these days, and sometimes we just have to wait it out patiently and have conversation and consultation throughout the whole process. But we make it smooth and easy for you.
And then in terms of timing, like I know we referred someone your way a couple days ago. Hopefully that works out. Let's say you get to yes, and it's a thumbs up, let's go. What's the typical time frame look like to get rolling?
Molly, you want to handle that one as well?
Yep. So our process is, of course we want to get it done for them as quickly as possible, first and foremost. So the sense of urgency is there. We need to do our due diligence and make sure that, like Willie touched on, we're looking at the open AR, and then once everything is cleared, it's just a simple let's verify, make sure that there's no issues with these open AR loads, doing our personal verification and making sure that the other factoring company is the one receiving payment on these loads, and making sure that the carrier is not going to get paid in the midst of buying out the account. So we like to put, like I said, sense of urgency is major. I would say the typical buyout timing is a week.
Yeah, it's approximately a week. Now that's for buyouts, Eric. Now, if like the customer that you sent us yesterday, if there is no factoring relationship in place, and say it's a new trucking company or a trucking company that's never used factoring, then that process is just a matter of, we send out our one-page agreement via DocuSign. It's electronically signed. That can be done while we have somebody on the phone and explaining our product to them. And then, we do our underwriting, much like a bank would. We do underwriting for 24 hours. And then after that, they're free to send invoices in. And so without another factoring company relationship in place, it's a 24 to 48 hour process. Really simple.
Yeah, that's a quick turnaround.
Sure.
Okay, Evan, anything else in your presentation you want to share, or should we pause for a moment for potential questions outside of me, the question proxy asker so far in the presentation?
Yeah, we're done with the presentation part of it. Sorry, I answered your question, Evan. We're done with the presentation part, and we can go on to whatever questions anyone has, or open it up.
Yeah. So as a reminder for those in here, you can either throw your question in the chat box or just go to that mute button, press it, and let us hear your lovely voice. I'm just going to go ahead and pick on someone because I see he's on. Nick, come off mute for a second. Nick is with TLC. Yeah, we can hear you. So from your perspective, Nick, what do you hear when you're talking to prospects about, and this might be sort of a Nick / Thunder answer, but any key pings that you hear that might identify, hey, this is a good opportunity to work with Thunder for their business? Any key questions or pain points you identify in talking to prospects that might say, yep, this might be a good solution for them?
Yes, I mean, I can kind of give some feedback. I typically don't have a lot of conversations, honestly, about Thunder. I've had a few, and it's primarily with the smaller fleets. A lot of the larger fleets that I do call on, obviously, wouldn't really use a service like this, but you know, it's when some of those smaller fleets have a problem with cash flow, or you know, it came up a few times during the pandemic where something like this could have you know, been of value to some of our prospects that we call on. I was just kind of hoping to hop on today and get some more feedback just about the program in general. Just to be completely transparent, like I said, I don't have that many conversations about it in general. I would like to, I guess, start more. But
awesome.
yeah,
Well, thanks for joining today, owning your education. I love it. That's a good point, though. What is the average fleet size? Is there like a sweet spot, Willie and team, for you all to say this is our bread and butter in terms of fleet size?
Yeah, Thunder has a sweet spot, and you know, it's anywhere from one truck up to probably 30-35 trucks. That's our sweet spot. You know, and it just depends on that trucking company's situation. We have companies with we have customers with 100 trucks. We have bigger size carriers, and it just depends on the situation of that trucking company. And it is, Nick, it is prevalent with those larger carriers. They may support their bank line. Smaller carriers, it's hard for them to get a traditional bank line. As a carrier matures, obviously they can get a traditional credit line from a bank, but some of our larger carriers support that credit line with factoring. And so when we talked earlier about dedicated contract lanes, and then, you know, the spot market, maybe the contract that the specific carrier is on is only for the produce season. Maybe it's the pumpkins coming out of the ground, who knows? And then they switch over to the spot market. A lot of larger carriers aren't comfortable in that spot market, you know, with the credit process, with understanding whether brokers are going to pay their bills. And that's when they'll lean on us and utilize our services.
Got it. Kind of like TLC. Got, you know, one person company. We've got 800. Kind of all over the map there too, which is good to know that no matter the size, the solution can still be there.
Yeah,
I don't
absolutely.
see any other questions in the queue. Sorry, Will.
So yeah, sorry, I was going to say, and that's one thing I didn't bring up. You're right. Much like TLC, some of our larger carriers, although they have a traditional bank line, so they're credit worthy and there's plenty of cash flow, they simply rely on us for our back end office support. They can hire 3 or 4 people to do their billing and collections, or they can hire none, right? And so there's different ways for them to return their money, you know, as from the service and the back end support side. Maybe they just want to concentrate on finding great freight and they don't want to deal with billing and collection. It's a big pain in the butt for them. And so they just hand that over to us, and we handle all of that for them.
That's a great point for bringing that up. So can you do that as a separate sort of a la carte service, or is it a bundled solution, meaning it's going to be a combination of the factoring with all billing in the back end that you just mentioned there?
You might have been sitting in a board meeting with me. No, right now it's all bundled in. So you're going to get the quick pay service with it, and so it's going to be anywhere from 0.5% to 3% that we charge per invoice, and so it's all bundled in together. But we do, maybe by the end of 2022, we have just a separate and independent billing and collection service. That's like a guaranteed 30-day pay at a way smaller fee than that 1% fee. So stay tuned for that one. Good question.
And Willie, I apologize if I missed it. I had to take a call like 10 minutes ago. Is Evan, would he be the best point of contact for someone, wanting to get some more information?
Yes, both Evan and Molly, either one can help you out. We'll, on this slide, we'll go ahead and add Molly's information on there as well, but you can utilize this number here to, that's going to be your quickest route to get some help from somebody.
I appreciate it.
Yep. And that goes also to the, if there's channel partners in the audience today, maybe insurance brokers that are looking for different solutions to offer to the carriers that they're calling on every day, please reach out to us. We're happy to have conversations about anything and help through the process. So we're happy to hop on a call with you to assist and add some guidance. Whatever you need, just let us know.
Yeah, there's a couple there, Willie, and that's a good kind of tangent to say we probably want to have perhaps a separate either presentation or meeting with our agent partners, just because it is obviously it's a different conversation, but that's a good call. I think we have an opportunity there for sure.
Yeah, absolutely.
All right, I want to pause about 5 seconds just to see if anyone wants to come off mute, ask a question, or throw a question in the chat box. Going once, twice, sold.
And do you have the most current marketing information for Thunder funding?
Say that again.
Say that again.
I was just wondering if Kendra has the most current information. I was just trying to look for, like the brochure. I just got a new computer, so I'm not sure if I can find it right off the top. I just wanted to see if we have the most current marketing information that we could send prospects.
We'll make sure you do, and we'll have it on our team's channel for you, Nick, for easy access.
That's all I've got.
All right, all. Well, thank you so much, the Thunder team, rock stars. Great work. Appreciate you joining today and educating us on your solution. It's great to be a part of the same family. And thank you for those that took some time out of your day. Again, this is recorded. We'll have this will be a link on our website. Also, can we have access to this deck to be able to send out to our folks? Yep, cool. So we'll do that as well as a follow-up action item. Thank you so much again. Stay safe out there and take care. Bye all.
Thank you, everyone.
Thank you.
All righty. Bye-bye.